Thank you very much. I'll just go straight to the presentation. As Georgia introduced, my name is Amanda Archibong from the African Risk Capacity, and I'm Partnerships Manager. And the presentation that I'll be making today is on innovations in disaster and climate risk financing in Africa and how the ARC mechanism works. Okay, so I'll just be going through who we are, why were we established, and what our offering is, what we have in the pipeline as well as the lessons learned and the way forward. So ARC was established actually as an African Union instrument by 33 member states of the African Union as a specialized agency to address issues of disaster risk financing by providing more responsive, quicker and efficient responses to disasters as they occur on the continent. We were set up in 2012 by a treaty that was conducted in South Africa. How are we structured? The ARC group, as we like to call it, is structured by being classified into an agency and a financial affiliate known as the African Risk Capacity Insurance Company. And the agency is responsible for conducting the engagement with governments, as well as providing oversight to the general ARC group. And the financial affiliate, the ARC Insurance Company Limited, conducts risk profiling and risk pooling for countries in our pool, as well as providing risk transfer functions. Now, why was ARC established? ARC was established, or is based on the premise of the concept of disaster risk financing, which is essentially arranging funding ahead of the occurrence of disasters in order to provide more timely and effective response. We must, however, note that risk financing must be complemented with other resilience building measures, but these concepts are not mutually exclusive. They must be conducted in complement to each other. This slide just speaks to the rationale for why we were established by looking at typical humanitarian response and how household mechanisms cope with disasters. Typically, we see that when disasters occur, by the 5th month, households are beginning to sell their productive assets, are beginning to eat less preferred foods, and are beginning to deplete their savings. Current emergency response has to go through the process of an assessment and an appeal and a call for funding before the response can then be conducted. And this goes on till about the 6th month after the disaster has occurred. Now, ARC was set up to provide funding as a buffer between when this period of assessment and appeal is conducted and the funding comes in, to be able to actually provide funding within that time frame. And so typically, for the ARC, the modeling would have occurred to estimate what the impact of the affected population would be should a disaster occur. And so that figure is already known before the onset of the disaster, so that when a disaster occurs, before actually the harvest is occurring, countries can already receive payouts and the response can already be implemented by the 3rd. So within the 3rd month, all of the response would have been conducted. This also speaks to the rationale by looking at the cost of delayed response, where we see that investing in early response saves every dollar that we invest in early response saves the households $4. And so this is the rationale behind why we think early response is very needed on the continent. Having said this, what are the offerings that ARC is providing? These are grouped under the index-based insurance that we provide, as well as a climate change adaptation financing mechanism, and partnerships with humanitarian actors to provide insurance, which I'm sure most of us would be interested in. So I'll just go through the current products on offering, which is the drought, to show how it actually works. Now, for the drought mechanism, this is being provided using 3 work streams. The first work stream is the early warning aspect. We actually help countries use a modeling tool known as the Africa Risk View modeling tool and help countries predict the likelihood of a disaster occurrence. The second work stream is helping countries prepare contingency planning plans through which they can use as a basis for the implementation of the response if the insurance payout is triggered. And then the third work stream is the actual insurance. As I had mentioned, the first work stream, which is the Africa Risk View, providing early warning which countries need to customize their national context to, is actually a warning tool whereby the rainfall is assessed, typical rainfall patterns are assessed, and this is then overlaid with the impacts on affected populations to develop a drought index, which would be used to then assess response costs. So that, in a nutshell, is how the tool works. The second aspect, which is the contingency planning, which we see as a very viable aspect, is actually helping the countries develop operations plans and then final implementation plans so that they are ready even before a drought occurs. And the third component, which was a risk transfer component, is using parametric insurance. There's a definition on there, but I won't go into that definition. But essentially, when the country would have done their contingency planning process and customized their drought risk, they then have to then go through the process of identifying how much risk they wish to transfer to insurance, and then how much payout they would like for their policy to trigger. But these are obviously based on what amount of premiums the countries have available. So just an example of the process that we go through in West Africa, we see that a typical season, the policy design and issuance would have gone on between the month of January and April. And then the season is monitored from the month of May to August to September, actually, to see how it would, what would happen and if there would be a policy trigger or not. And then a payout would then occur. If a payout occurs, it then occurs if a drought occurs, the payout would then occur between the month of October and November. So it's essentially a more efficient way of addressing as opposed to waiting until the occurrence of the disaster. And of course, we assess if there's a basis risk incident, which is where there's a discrepancy between what the model says and what is actually happening on ground. And ARC is trying to address this by developing a basis risk fund to actually address this issue. What has happened so far? Since 2014, when the first pool was launched, we've had payouts to about 4 countries. We see them there: Senegal, Niger, Mauritania, and Malawi. And what were these funds used for? They were used to assist over 2.1 million people, as well as over 1 million cattle. Now, I'll speak about another aspect of our work, which is essentially how the humanitarian aspects can come into all of this work. We know that humanitarian funding is constantly shrinking, and humanitarian actors and partners and ARC have actually come up with a mechanism whereby humanitarian insurance policies can actually be taken out by humanitarian actors if the country has gone through the process of the capacity building which ARC offers, which were the first 2 work streams that I discussed earlier. And so the START network, which some of you may be here at the moment, and WFP, as at last year, started out the process of taking out insurance policies for the countries. This process was piloted last year and is still being developed. And so the benefits are that governments are able to build the capacities over time while they are preparing for the ability to access premiums to pay them. And humanitarian actors are also involved in this process as a more efficient way to provide funding to governments. So this is simply how it works, that partners take out an insurance policy that matches those purchased by ARC member states or even independent of those purchased by the ARC member states, and they develop contingency plans alongside the member states. This is effective because the systems are already in place by the country, and so the humanitarian partner can leverage on these systems. So this is just to explain that African governments are moving more towards ex-ante risk management, which is the typical disaster risk financing that has just been described. And humanitarian actors are still acting typically in the ex-post financing methods. And so this mechanism is simply to close the gap in that approach. So I'll just run through quickly what the products in the pipeline are. We're also working based on requests by African finance ministers on an outbreak and epidemic product to be able to use this modality for outbreaks and epidemics, as well as a river flood parametric insurance product. So we've worked on drought, and now there's a high demand for floods in our countries, and we're working on developing this product. The other aspect of the offering that we're giving to member states is a financing mechanism whereby they can access capital to reduce their adaptation needs. Because with the increase of disasters, there is definitely going to be an increase in the premiums, and this is not the most cost-effective way for countries to manage their risk. And so we're working on developing a climate change adaptation financing facility in which governments can access funding to increase their resilience to disasters. Just to say, one of our principles for partnership is that we want to be able to think globally, but also act locally to meet the needs of governments. And so we're working with different entities. I'll just highlight a few. With the African Development Bank, we have come up with a mechanism to help countries access premium financing to be able to pay their premiums, with the IFC and the World Bank and many other partners. We've learned a lot of lessons, but one that I'll highlight is the fact that there's need for mobilizing premiums for consistent participation in the pool. What do we see as the way forward? Partnerships. We've talked about so many different mechanisms, but indeed the best way forward is by partnering with all the different entities. We've talked about the replica. The humanitarian agencies are able to partner in this regard to provide insurance to countries, NGOs, the private sector, as well as the different technical data services available to help improve the sort of data that goes into the parametric, to the modeling tool, to help as a basis for the parametric insurance to trigger more effectively. Thank you very much. That's the end of my presentation. And anyone with questions? Yes.
I am from Bangladesh, different from the African perspective, from Asia. I want to know from you that in insurance, what actually, for example, the agriculture insurance, what actually farmers are paying for that one, or the government is paying that one, or the African countries together is paying that one to get if some kind of happening over there negatively. So this is my want to know that one.
Thank you very much. So this is actually a sovereign insurance mechanism whereby the governments actually take out insurance on behalf of the population. And so the modeling tool helps identify what the most vulnerable aspects of the population are. And through the contingency plans, the funds actually go into those different vulnerable populations. So it's a sovereign level insurance as opposed to the farmers themselves taking out the insurance. Thank you. Do I have any more time? Okay. Yes.
Is there anything where there's sort of planning and preparedness done for increased resilience to reduce the expected economic losses and therefore the associated risk premiums? So are the ARC really looking at a preparedness planning approach which could reduce those losses? So taking, I guess, the approach the other way round rather than ensuring to then provide funds at just the recovery stage?
Okay, I think the presentation highlighted that actually the planning is done before the onset of the agricultural season. So the countries already know where their vulnerable populations lie, where the response needs should go, so that when, before even the drought occurs, the model would have triggered and they are aware of if there's going to be a disaster or not, and the funding comes in before that happens. So we regard this typically as preparing them for receiving support. I hope that answers the question.
Mostly.
Okay.